Wonderful. Well, thank you so much, Jeanette. And it's yes, it is an absolute pleasure to work with TradeThirsty, and I love them all over there. And they always bring such great speakers to the table as well. So you guys have had a treat today, I'm sure. And welcome. Thank you for joining and sticking around for my talk. It's we're going to be talking about live trades. We're going to talk about trades I bought yesterday, trades we're looking at for on Monday. We're going to be talking about it all. So and all in the context of smart money systems and how we identify them and what we're looking for. But most importantly, again, like Jeanette said, the way that we trade is all in a set and forget fashion. I got into trading 17 years ago now. I worked 6 months in a video store because I love movies, and then after 6 months I left and got into the stock market, and I haven't done anything else since. So it is my passion, and but it's not meant to be my job, because I always thought that trading was meant to be something where, or investing in general, is meant to be where money works for you. So while I only do trading, it still isn't something I want to sit around and watch all day long. I want to go outside and play golf or travel or last 3 weeks we were in an RV trip through Montana and Idaho. I had 48 open positions while I was in the RV, and we didn't look at the market once during the day because I was at the wheel. So I couldn't really be looking at my laptop. But I felt totally comfortable because all those positions were managed with entry levels, stop losses, where I was going to take a third of my profit, where I was going to take another third of my profit, alerts set up on my chart to let me know if any of the ones I was watching became a buy all of a sudden. So, creating systems where really technology can do the job for you as it should, because that's how 90% of the trades in the market every day happen anyway. It's all computerized. So why not join the winning team, so to speak? So disclaimer, we're going to talk about live markets, and obviously disclaimer, a lot of the stocks and options I discussed today are being held by myself personally, or in the Acorn trading portfolio, or by the coaches employed by Acorn. Again, that is not a recommendation that you should buy them. We are not a registered financial advisor in any jurisdiction or province. Okay, so yeah, I already gave you the blurb, but yes, we're talking about smart money. We're going to talk about how we do it, and we're going to talk about some live setups and what the market's doing right now, which is exactly what we provide: systems in the line of keeping it simple. Excuse me. So right now, I think it's important to point out from an overall perspective that we are in a very dangerous market. We are in the eye of the storm, and next week, well, we've already seen a lot of mayhem in the market, but we are going to in a particularly interesting period. Okay. Because what's going on with the US and China right now, look, I mean, the market is technically driven, but all it needs is a catalyst to set fire to a bit more action. And what's gone on last week has kind of gone unnoticed by a few people, but certainly the market hasn't shown its reaction yet. But on Wednesday this week, the US Department of Commerce added Huawei and 70 other companies to its entity list. So that means that they basically, I mean, these massive Chinese companies cannot buy parts or components from US companies without the explicit approval of the US government. So Colin Twiggs, who was writing about this, states, look, we're sliding towards a fully fledged trade war following straight after the imposition of tariffs by both the US and China. US action against the cell phone maker, I can't ever pronounce it correctly, will be taken as a direct attack on Chinese industry. So the CCP is already stoking nationalist sentiment to bolster public support. And yeah, in fact, on Thursday and Friday night last week, CCTV in China replaced regular scheduled programming with 2 films about the Chinese army fighting the US in the Korean War. So I mean, things are certainly heating up, and I'm really not one to get into news. I hate listening to the news because I feel it affects my trading negatively. I try to ignore it, but this is hard to ignore. This certainly could be a great catalyst for some really great volatility. And this is why you really, really, really need, in this market specifically, to have an edge. Because if I'm going to go and buy a stock, on Friday. In fact, I bought 3 on Friday. These are stocks that I would buy even if I was confident of having them, even if the market were to go down 3 or 4 or 5% next week, even if a trade war was to ignite. Would these still be 3 stocks I would be confident in buying, knowing that? And if the answer is yes, if I would still be happy to buy them because they're so damn good that even if the market were to go down 3 or 4 or 5%, I'd be confident of them still going up, then that's a trade good enough for me, right? And the same thing with a short. If I'm going to go and short a stock, which in fact I bought puts on one company, which I'll show you soon on Friday. Am I confident? Am I so confident in that trade that that I'm not worried about if the inverse happens? What if the market goes up 2 or 3 or 4% next week? Am I still that confident in the short that I would still buy puts in it or still short it? So, I mean, I think this is the kind of mentality you should be having at all times. I think that's how you really approach finding a really good strategy. But I mean, in this kind of market, it's especially important when you've got market risk. So you want to find those stocks that are the salmon swimming upstream, that are that strong. And that is how we trade. As Jeanette said, we're totally transparent. I tell our students every single trade that we're getting in and out of beforehand. We publish our trades to our students. We publish them in the trading portal. In fact, last year in October, for those of you that were following us, you'll know that we predicted the crash of October back in September. We said in the first week of October, the market's going to take at least a 10% decline and then another further decline beyond that. So we set up an account with $100,000 in it to demonstrate the power of our alerts and trading both that big drop and then the big rally back up. We were able to average 15% a month on that total account, that example account, by following just the simple, consistent rules that I'm going to be showing you today. Okay. So that's why people generally don't make money, is because they lack rules. They don't take action. In fact, I mean, I was with Jeanette and the TradeThirsty team in Chicago last year when we were, and Linda Raschke of Market Wizards joined us, and she was talking about. For those of you who don't know Linda Raschke, she's a great trader. She was featured in Market Wizards. She's been around for a while, and there's not much she hasn't seen or learned. And she was talking about the importance of rules. And she said that, you know, your job as a trader is not to make decisions. She said your job as a trader is to execute. So your job as a trader is to pick a system, understand the rules, and then let that system do its job. Let that system find you the trades. Let that system show you the opportunity. Your job, once you've decided on what that system is just to execute, pull the trigger. But people often don't, because they don't have a system or they don't believe in it, right? They don't have confidence in it. So, I mean, that's why people get sucked into emotional decision making, which is generally always bad over in the long term, because they lack systems, they lack strategies. And the smart money know this. In fact, the smart money rely on this. They want to sell you newspapers. They want to, you know, they want to hype up the, ring the bells and play the sounds on the TV shows. And, you know, it's all wonderful infotainment. But it's not necessarily going to help you make any money. And a simple question I would ask is think of it this way. When was the last time that you heard a CEO come on television and say, hey, everybody, hello, shareholders, I just want to let you know that tomorrow I'm going to be selling 100% of my stock in the company. And the chairman of the board, he's going to be selling 60% of his stock. And my vice president of North American sales, she's going to be selling 80% of her stock. And we just wanted to let you know first. Right? When have you ever heard that before? Never. Right? But it happens all the time. It happens all the time. In fact, let me just show you a really quick example, because this stuff blows my mind. let's look at a stock called PRTY. All right, now this was again when we were predicting that crash in October of last year. This was one of our alerts that we had issued to our students. So PRTY, you can see here on the screen, was a perfect example of this setup. So when we're looking for a perfect setup, just to show you what we're going to be talking about today, the first thing we're going to be looking for is the pattern. Because as I mentioned earlier, 90% of the volume in the market is accounted for by algorithms, algorithmic trading, and they make decisions purely on rules, patterns, in other words. So, when you understand the patterns, there's no gray area, there's no guesswork. It's black and white as to how you trade it. Whether it works or not, there might be a 70% probability, but how you trade it is pretty much black and white. So when you see an upward channel, that is a bearish pattern. It's bearish because it tells you that there's a close to a 70% probability that after 3 touches along support, it will break down. And it will break down at least the distance from the top of the channel to the bottom of the channel. It's pretty black and white. So the breakdown here was something we were waiting for, as you can see. So then we had a look at our smart money indicator. Now, our smart money indicator is another key part of the decision making, because this actually looks at what the algorithms are doing. So the pattern is algorithmic because that's the rules, and then this looks at the power behind the pattern as well. So it looks for all of the key points that define a real trend. Is the stock making higher highs and higher lows? Is volume increasing or decreasing as it does that? Where is the stock closing in its daily range? Is it closing at the top of the day or the bottom of the day? Is that increasing or decreasing day over day? All of these things. How much is the stock moving during the day? It looks at all of these factors, which are what truly define a trend. Not just higher highs and higher lows. There's a lot more to it. So when we see that the stock's going up, but the smart money indicator is going down, that's a bad sign, or a very good sign for a short, if I can put it that way. And then when we have a look at the final checkpoint and we say, well, okay, great, we have a beautiful technical setup here. But what about the story underneath? Is there something extra special about this play? And then we go and have a look at the insiders and we see that, the 10% owner was selling $64 million worth. The other 10% owner sold $188 million worth. Oh, and then come 2 directors that sell 100% each. Then then the previous 10% owner who sold a little bit, now they just get out of everything. They dump it, 100%, $480 million. And this goes on all the way up the chart here, where the people that know best, the big money players, the ones that know what's going on, they are selling everything. And I guess they must have gotten lucky because the stock then plummeted from $15 all the way down to $6 recently. And this was a play that we played out all the way down to around $8.60. But as you can see, it got much worse than that. So this is, again, a great example of a simple and very powerful tool, because who in this room, if you were looking at that same screen, looking at PRTY on one of those days, and someone said, hey, this is a great buy, like I sent you one of our alerts, and I said, hey, Joe, this is a great buy. We should buy it now because the CEO, the CFO, the 10% owners, they just sold all of their stock. So, hey, there's lots of free stock out there for us to grab up. I don't think anyone in their right mind would do that. I wouldn't. But just to give you an example of how many people don't understand such simple things as this and such powerful things as this, I mean, this was trading close to $16 million worth of volume every day. So, that's over 10 days. It's $160 million worth of people that aren't even looking at this. So this is why sometimes such simple things work so well, because there's so many people that just don't even know about it. So what we're doing here is we're getting in and empowering ourselves with following along with what the smart money is doing, because I believe that that is the most powerful way to get to the truth. You know, I mean, that's why I show you, that's why I share with our students and with you, you know, our real trades, our real results. Because if you want to know if something works, show me. Show me how much you've made using it, you know. And that's the same thing with a public company. If you want to know whether there's a really good opportunity here, then let's look for a stock where they're buying their own stock. Let's look for where the CEO has just bought 500% more than he's ever held before using their own money. And the other directors are doing the same. Let's look for the greedy insiders that are going, yes, this is time to buy, guys. We're going really well, right? So I believe that that's a great way to find the truth of anything, is follow the money trail. So we're going to be talking about some trade setups that follow this here in a second. But before we do that, I want to take a quick step back and talk about, the importance of these steps we're going to follow. So I've talked about patterns a few times, right? So the reason why patterns are going to be a very important part of finding these very powerful setups is because, firstly, this is how the market makes its decisions. You know, the way that volume is run or managed in the market, they estimate 90% of it is all coming from algorithmic trading. So again, pattern-based decision making. Buy here, sell here, stop loss here. The 90% of the market is trading like I do, set and forget, because they're computers, right? There's no one sitting there watching the chart develop. There are algorithms that are pre-programmed where to buy, where to sell, where the stop loss is. 60% of globally managed money is done the same way. So you see my point. Why put yourself through all this unnecessary work? I mean, unless you really enjoy it and you want to sit there all day, you know, that's fine. But I mean, don't you prefer fishing or going to the Pikachu movie? You know, it just depends on what you want to be doing with your time. But you don't have to sit there all day, is my point, because that's not how the market works. It's not how the algorithms work anyway, and they account for the majority of volume. So the opportunity there is we can reverse engineer these patterns. So we don't try and trade every pattern. We are not the expert at every single pattern in the market, because there's over 100. But what I've spent my entire lifetime basically as an adult doing is try to figure out what those highest probability patterns were. So out of 100, which are the top 3 or 4 that really work very, very well? The highest probability, the best risk-reward ratio over the shortest period of time. And so then once I'd figured that out, just start specializing in that and reverse engineering how to find them, which we've done very well. And so we're going to start talking about showing you those patterns as well. And that's why patterns are so very important, because they show you where the smart money is going from an algorithmic standpoint. So once we've figured out what the pattern is, the second point then is to combine that, as we've showed you in the PRTY example, with the smart money. Are the insiders doing the exact same thing? And then we've got the perfect 1-2 punch. So in terms of, again, looking at the overall market, in terms of looking at smart money systems, the first thing I want to share with you as we jump over to the live charts is to look at what the stock market is doing. Now, you'll see that I put this in parentheses, right? What is the stock market doing? Now, there's a reason for that, because there really is no such thing as the stock market. It's actually a market of individual companies. So what do I mean by that? Well, this is actually one of the most powerful free, because I'm going to give it to you right now, it's one of the most powerful indicators in determining what's going on with the stock market, so to speak. Because what this tells you, what this indicator MMFI tells you, is what percentage of stocks are in the market are above their 50-day moving average. The 50-day moving average is really important because it shows you smart money support, because that's where institutions buy, hedge funds, managed money, you know, the investor group, you know, not just the traders that buy and sell on the 9-day moving average and whatever. This is big money, you know, looking for longer trends. So when a stock's below the 50-day moving average, it's basically lost that smart money support. Now, to show you how well this works, I'm going to firstly just go back to show you the example of in 2015. Now, if you don't remember, 2015 was the last time we had this kind of volatility, these kind of flash crashes. So keep your eye here, and if you have a pen, you can even write these dates down, or we can do it for you. If we write these dates down, the first time, look at the left-hand side of the chart. You'll see that prior to this big flash crash, look at what happened to the S&P 500. Nothing. Nothing happened to the S&P 500. From April, May, June, July, August, the S&P did nothing. It went sideways. It didn't really make higher highs. It didn't make lower lows. And then on August 19th, it plunged about 10, 11% in 5 days. It was deemed as chaotic and unpredictable. I beg to differ, because we predicted it, and not because we're have a crystal ball, because once you know this indicator, you could have as well. So I'm not trying to pat ourselves on the back, because it was easy to see, is my point. And then we had another flash crash, which was deemed as unpredictable and chaotic. You know, people stopping to trade because they're like, oh, this market is unpredictable. Well, it's not. The market rallied up and regained all of its losses by December 29th, and then flash crashed 13% on December 30th. Okay. And of course, we know what happened last year. So let's have a look at what the indicator was saying. If we go back and have a look at 2015, let's zoom back here. There we go. All right, so this big thick bar I've got drawn on the chart is when the market crashed. But have a look at what individual stocks were doing beforehand. So have a look over here on the left-hand side. Look at right there, April 15th. Again, when the market was going sideways, individual stocks, we had about 70% of them were above their 50-day moving average. Now, as the market went sideways, with nothing going on, individual stocks were going down. They were breaking support. They were in a downward trend. In fact, by the time the market showed signs of weakness, we had already declined from 70% down to around 30% of stocks still above their support. So this is a very great way to see what's really going on, because the indexes are easily manipulated. And unless you're purely just trading S&P futures, it's not going to tell you what's really going on necessarily. So here we go. So we can see the example here, rallied all the way back up. And then once again, here's the vertical line. Well, let's put it there on, there's December 30th. So as you can see, in December 30th, by December 30th, the stocks in the market had already dropped once again from 70% all the way down to 24% before the market really did anything. Am I explaining this clearly enough? Is everyone following along? Just want to make sure it's making sense. Okay. So as we go over to the right-hand side, let's fast forward to the most recent scenarios. January. Okay, so why did we call the crash in January? How did we call the crash in January? For those of you that were following with us back then, you'll remember this was one of the key factors. We saw that once again, this indicator had gone up over 70%. So we were in this sell territory where historically this has always resulted in a decline. In fact, over the last 10 years, whenever we've gotten to 70% or above, that indicates the beginning of the downtrend within 80% of the time, within 1 week. And the other 20% of the time, it's never stayed there for longer than 3 or 4 weeks. So it's been 100% accurate in calling the top within a maximum of a 4-week outlook. So there was that. Once again, in October, you can see here in June, we peaked at 70%. June was when the decline began, not October. So we began looking for shorts in June and July and August, because by the time the market had crashed in October, a lot of the really weak stocks, the ones you want to short because they're the ones that can really, really drop, those had already dropped by 50% because they started their decline in June. You see what I'm getting at? This is coming back to my comment earlier of looking for the really good longs or shorts based on understanding the ones that are the salmon swimming upstream. The ones that start dropping as the market's going up, those are the stocks that make up this group, the ones that are already going down at that point. Okay, so as you can see most recently, as the market made a record high in April, May, you know, when we got to those record high levels, you can see that individual stocks had once again gone up above that 70% mark. We stayed there for 2.5 weeks, and then we began the decline. So we were once again down to significantly lower lows before the market started dropping. And right now, only 41% of stocks are above their 50-day. That's not a good sign. That's big divergence. Okay, so very, very useful, because this indicator tells us how bullish we want to be, when we want to start taking risk off the table, start taking our longs off the table, reducing our position size, and start scanning for shorts. It gives us kind of a barometer of how long and how short we want to be at any one point. And we have a whole lesson on this that teaches you how to use it. And so when we hit these peaks, you know, again, these are trades we did with real money. You know, we put 130,000 in October when we reached that short point and started to drop. You know, we put $130,000 into TZA, TZ at $9.24. TZA is a triple short on the market. So we wanted to short the market. So we bought TZA. That ended up going all the way up to 18. I didn't ride it that far. I got sold most of mine around $14 to $15. But again, that's still a great move. We also shorted the NASDAQ. We put $99,000 into SQQQ, which is an ultra short on the NASDAQ on November 19th, which was when we began this, the decline there. So there you go, there was November 19th, somewhere around here, went from $15 up to 21. So again, this isn't just hypothetical stuff. This isn't just good ideas that, hey, you could have maybe done this if, but maybe. These are things where, because the rules told us to, we executed. And when you do that, when you have those rules, it becomes simple, it becomes easy to do. So let's have a look at how we then take this to the next level. So now that we have a system that's giving us an idea of what the market's doing, of the real market's doing, now we can start hunting for those individual stocks. And this is where the smart money trades come in. So this is an example of one. So VSM. So we alerted this. I'll bring up our trading portal here for a second, just so I can show you this. So so Acorn put together, we just launched this earlier this year, an Acorn trading portal. So you can, when you log into our members area, there's my ugly face there. You can go into the trading center. This is where you can see, you know, our recent stock market alerts. You know, so stock setups for Wednesday, May 15th, stock setups for May 14th, setups for May 10th. We publish these videos. They're like 5-minute videos where we tell everyone what we're about to trade next and all the reasons why. We can also go into our trading center, where we can look up that VSM alert so you can see how that appeared when we first picked it. So here we go. There's VSM. So as you can see, VSM is still active, still an active alert. We alerted that on January 30th as a long. It was a flag formation. The entry signal was $38.07. The first target, $40.73. The second target, momentum, which means, basically unlimited. Just let it keep going up and keep updating the stop loss. So as you can see, as of now, the stop loss has been updated to $51.13. You can also go and see all of the notes. So you can see there's a link to the video where we first picked it, the timestamp of where to jump to in the video to watch it, and you can see all of the daily commentary that we make. Would a great move, would update the stop to 37.33. Gapped up above its first target, consider taking some profit off the table, let the remaining position run. Massive move up to 49.25, update the stop signal to 44.87, 47.64, 51.13, 49.93. So we're just constantly updating this kind of set and forget strategy. And you can even go and have a look at the chart, and you can see exactly what the chart was when we alerted it, because it will save it right there in the screen. So when you see the alert, you can look at the chart, the work and analysis is done for you. And also, when you're going back to look at alerts, you can say, what did it look like when they picked it? What did all the indicators, what were they doing? So you can see here on the bottom, look at this, the smart money indicator was going straight up as the stock was going down. Very good sign. That means the algorithms are buying and holding. And of course, you can see what happened next, right? So this is the process. So if we go back and look at the stock, originally had this beautiful looking pattern, and we'll go back to our other program just to draw this on. So we had this beautiful looking pattern as to why we wanted to buy this. So the pattern here is called a fallen angel. A fallen angel is where you get a downward channel where we go back and forth. Now a channel is bullish, just like an upward channel is bearish. A downward channel is bullish. So there's a close to a 70% probability this should break up and kind of hit its target there, and you're in here, you're out there, your stop loss is here, easy peasy. Set and forget, done. But if the channel doesn't break out, which this one did not, in fact it broke down, what does that mean? Well, it's actually creating this other pattern called the fallen angel. That's an incredibly powerful momentum strategy. It, in fact, was the only pattern that we taught at Acorn for 5 years. We didn't teach shorting. We didn't teach smart money. We basically took students for 10 hours and just made them experts in going long only and long this pattern. In 2008, we had 270 long only alerts in the worst market most people had seen, and we had close to a 73% success rate, just a little bit shy of those point something or whatever. Going long only in a crashing market. That's why this pattern is the #1 pattern I trade. Okay, so I want to point this one out first. So when we saw that, and we saw this beautiful little, so you get the downward channel, breaks beneath, and you get this nice little ski jump down the bottom. That becomes your entry point. Now after the fallen angel, we then had another really, really beautiful pattern, which is also one of the highest probability patterns in the market. So fallen angels are the #1 highest probability momentum strategy. And flags, which is the pattern I'm going to show you here, flags are the #1 highest probability breakout strategy that exists in the market. So a flag is where you get there's a number of things actually that define it, which we won't go into great depth today, but it's basically when you get this massive shot up, the indicators are saying there's huge buying, and you can see it consolidates, and then whatever the distance is of this flagpole, is how far up it should go again. So we knew this was very, very, very high probability going at least up to $43, but because of the presence of the momentum strategy behind it, was going to likely continue much further. And therefore, this was something where it had all of the criteria we're looking for. It had the perfect pattern. It had the perfect smart money indicator down the bottom. And to checkmate the whole thing and tie it up nicely. Was there anything special going on? You betcha. In fact, all the directors there, as you can see, were loading up right before it occurred. Susan Schnabel bought 42% and another 9%. That's 50%, right, roughly? Another 60, 65, 70. 81, basically almost doubling her position before the move occurred. So that is an example of something. This is probably something now worth getting out of. It's already had its run. But here's another example, ZYNE. So now let me show you as we start. One of J Love says VSM must stand for very smart money. It was very smart money. At least they've doubled their money in their own pockets. So let's talk about the set as we delve further. How we set and forget this. So ZYNE is a terrific example of a recent trade we sent out. And let me show you. In fact, again, so you get a feel for the alerts. So this is obviously we put the alerts into the trading portal, but the way you first receive them is we'll send them out as an email. So you can see this was the email we sent out for April 16th. And we'll just scroll down. So there's the video where you can watch the analysis and the actual picking of the setup. You can see we provide the alerts, updates on the previous setups. So, I mean, for example, MDCO, trying to turn here, looking good, enter if it breaks 29, next target 31.83. MDCO was a smart money setup. And there you go, as you can see, all the way up to $34 now. That was originally picked at 21. That's another beautiful smart money setup, which we won't talk about today, but just so you can get a feel for the alerts. McDonald's continuing a strong move so far. Would update stop signal to 187.87, right? That was a trading alert, which is now over. But as you can see, the target was 200. Actually, it's not over yet. So target 1, 200, target 2, 210. Stop loss is now 191.93. You can see where McDonald's has gone to, right at 200. Okay, which was another beautiful pattern where it broke out of this pennant formation. I'll show you one more. ETCG, if you're an Ethereum fan, this was a beautiful trade. ETCG, absolute powerhouse move. Last week hitting the $13 target for some nice big profits because we picked it at 8. The power of fallen angels. I have taken a position again in this for another potential play. Could get as high as $19. And that one then ran up from 13 bucks all the way to $19. In fact, we then entered it again last week on Wednesday at $23 and sold it at a preset target of 30. So this has been a beautiful trading vehicle. But I'll bring your attention back to ZYNE, but I just want to give you a feel for the alerts. So then here's our new ones. So those were all updates on previous positions, how we were getting in and out of them. So here's where that set and forget comes in when we originally picked them. So ZYNE, target $11.37, stop $7.43, enter with a break of 8.73. So we'll do our analysis, we'll find the pattern, and then based on the rules, we'll preset all of this at night so that we're not waiting and watching the screen the next day. As soon as that stock goes to 8.73, the brokerage is going to buy it. It's going to put a stop loss in at 7.43 and a target to take profit at 11.37. If you look at the pattern, you can see this was again a beautiful setup. Okay, what we had here was we had a a number of things. We had an ascending triangle to start with. An ascending triangle is bullish. Broke out. Then we created this lovely little flag. Right, so there's your flagpole. There's your flag. So what that told us was that this was going to rally, right? If it broke out through that little flag formation, it was going to go straight up to 1143. That became our target. So we pre-programmed the entry, we pre-programmed the stop loss, pre-programmed the target. You can see it actually went a lot further. I got out of this at 1143 as planned, which I'm quite happy with, because if I hadn't sold at 1143, I almost certainly would have been stopped out when it pulled back to 950. So that was the perfect exit. So as you can see, all the perfect pattern. Let's have a look at the indicator. And as you can see, beautiful accumulation going straight up as the stock went sideways. And once again, look at the smart money. Okay, you've got a director John Butler, who's never bought any stock in his company before, all of a sudden decides now's the time. You've got the chief financial officer who says bought $50,000 worth, but more importantly, 70%. Because don't get sidetracked by the dollar figure, because $70,000 could be quite a lot for most people. I mean, how many people in here have $70,000 right now that they could pull out of their pocket to just throw into one single stock? And if you were to do that and take $70,000 and put it into one single stock, how confident would you need to be? That's what we're seeing here. Smart money buying, and all automated and easy to do. And I mean, we can look at so many examples here. Even on this own list, Ahmed, new long setups. Entry here, target 527, second target 873, stop loss 363. So this was again on April 16th. Ahmed, April 16th was right there. The stock was at $4. Our first target was 553, didn't we say? As you can see, look at the smart money accumulation. Look at the pattern. There's that fallen angel again. That downward channel, the ski jump underneath, and bang, straight up to its target, all automated, no work necessary, bang, out. In fact, just for full disclosure, I am holding this position. I bought it back 2 days ago on Thursday morning. So this is actually a live trade, and it's done really well so far. It was up 10% on Thursday. It was up another 5.26% on Friday. So I'm now updating my stop loss to my entry point. So now it's free money. If it stops out, I haven't lost a cent. And I'll sell it, and I have sold half of my position on Friday as it hit $5 to lock in a profit. So if it pulls back and hits my stop loss, I'm golden. This is a winning trade already. So there's Ahmed. Now, just so you can see, this is again, you'll see the same thing again and again. MAXR. Look at the buying, 118%. CEO, President, 35, 34, 21, 34. Huge buying. Look at this is again another acorn alert. As you can see, this one rocketed. Let me just pull this up, sorry. So again, we're going to, I couldn't remember what the targets were. So yeah, entry signal $5.12, target 1, 673, target 2, 973. Once again, there's all the notes you need to see, ongoing commentary. There was the chart when we first picked it. So 512 was the entry signal, and yes, as you can see, already gone from 512 to a recent high of $9. It's almost 100% move, and it's the same thing again and again, folks. It's just simple, based on what's the pattern and where's the smart money going. It's the 1-2 punch. I don't really know what else you would need to know, because that tells you entry signals, exit signals, how much power behind it is happening, the probability, and stuff we couldn't possibly know as to why the insiders are buying so much. I'll show you one more that I bought on Friday, CTXR. I bought this at $1.27. And actually bought more as it went up, but look at the insiders here, 118%. Oh, we're on the wrong stock. And I don't know why that's incorrect. Sorry, that's still MAXR's chart. Let me just bring up CTXR manually because I want you to see this. So there's the insider action on CTXR. Again, look at that. There's $1 million from the chairman of the board, executive chairman of the board, who is buying 15% here, 6% there, 5% there. Then all of a sudden, bang, 151 for $1 million. Then another 84%, $4 million, $5 million worth, and even more, $1.8 million. The CEO jumps in, buys 200 grand worth. Right? Look at the chart. If you look at the chart, you can see we're breaking out of this downward channel. Now, this is more of a channel style move, but it's also very special because this is the first time the stock has crossed its 200-day moving average since, no, it's the first time it's crossed its 200-day, well, been above its 200-day moving average since, well, really ever. I mean, it got a little bit above here, but it's been under its 200-day moving average for a couple of years. And this is the first time it's closed really above it in all that time. And the volume went from 170,000 on Thursday to 865,000 on Friday. Huge insider buying, and I'm in it. This is another great setup. In fact, after hours, it's currently at $1.50. So that's already up about 20% from our original entry signal in a one-day move. This works for shorts as well. Remember, I told you this isn't just a market for longs. You know, these are the longs I'm in, but there's also very great shorting opportunities as well, because not all stocks are going up. In fact, only 40% of stocks are above their support, as we found out earlier. So what kind of shorts are we playing? Well, the same thing. IONS was alerted on May 2nd. Look at all the insider selling. All the insider selling here. So we alerted it to our students. We have a look at the chart. And here's the pattern. It's an upside down version of what we just looked at. Let me turn this chart upside down so you can see what I mean. Look at the channel, breaks down, so there's our fallen angel pattern, and then look at this, bang, shoots straight up, right? There's our flag, fallen angel, number one pattern, flag, number one pattern. But this was an upside down version, right? So this was a bear flag. So we pre-programmed if it broke below $74 and change, we would buy the puts. And our target was, where would it be? Let's measure it. Right there, $65. There, $65. That's also where support is. So the entry, preset. The exit, preset. And we jumped in and bought the $70 July puts for $5.74 and hit the target of $65 4 days later with a, again, close to 100% move. Last one I'll show you, and then I'll talk about how this all works if you want to follow along with us. FN, that's the other one we bought Friday. So last one I'll show you. Look at the insiders. Huge insider selling all across the board. Where do you think this thing's going? Would you buy it? Absolutely not. And then let's look at the pattern. FN. Here goes your upward channel. That tells us that, let's just measure the channel here. That tells us we're going to likely drop at least that amount down to around $43. So as soon as that broke through the entry signal, my brokerage system automatically got me in. It was all automated if we break the trend line, buy the puts on this stock. If we hit $43.53 is my target, sell the puts. So as you can see here, there's a screenshot from my account that I just sent myself, which is again a live trade. I'm holding this. We bought this at $2,400 was the position I put into this at $4.80. I've already made $1.3 thousand. It's just a little bit off the screen there. Already made $1.3 thousand, but this is the bid and the ask is already up to $758. So this will likely be 100% profit, if not more, on $2,400. It's $2,400 in for a $2,400 likely return by Monday. So this is, again, as you can see, this is all real stuff. We don't just teach this, we trade it, and we show our students exactly how we're doing it. And in this kind of market where we could see volatility, big volatility in both directions, this is the time where you really, really, really need to have a strategy. Because if you don't know the strategy, if you don't know where you're going, any road will take you there, and you just end up wandering through Wall Street. So we've put together a very, very special program, which is going to be, for the first time in 6 months, taught live on Monday. So let me tell you all about this. It's our Smart Money Workshop, and it is 3 modules that goes through pretty much everything we've discussed. The first module are our smart money indicators. So the Twigs money flow I showed you, the indicator on the screen, that is included in the package. A lesson on the MMFI I showed you and how to set that up and use it for entry and exit signals. There's a lesson on that. And then there's 2 other really, really, really powerful smart money indicators we use, one of which is purely for the S&P 500. It has given over 1,350 alerts since 1960, and it has been accurate close to 90% in predicting the S&P direction for the next 2 weeks. This indicator is probably the most powerful indicator of all that I've ever found for trading. Now, I don't trade futures, but if you trade futures, you need that'll change the way you trade. I use it for picking direction of the market so I can scan for the stocks or options I want to trade if I'm going long or short. Now, that indicator is going to be giving us a signal on Monday. That's the next signal as to whether the market's going up or down for the remainder of May. But that indicator is included, and so that's Smart Money Module 1. All 4 indicators we use for market direction and timing. So that's your foundation. That tells us, are we going long or are we going short? And those indicators are really easy to use, and there's lessons on what you're looking for in each. Then we go to Module 2, patterns. Which patterns do we want to trade? Why? How do we enter? How do we exit? Where do we set our stop loss? And very importantly, how do we automate it all so we can set and forget and go and do whatever we want, right? I mean, I truly believe that people forgot that investing is meant to be about money working for them, not the other way around. And again, I didn't show you the photos earlier, but when ZYNE hit its target, we had a $3,500 profit in 4 days. My phone dinged in my pocket to say that the trade had executed, and I got my girlfriend to take a photo because this is what we were doing when we banked a $3,500 profit. We were sitting in Thompson Lake up in West Glacier in Montana. That was $3,500 profit, utilizing $3,000 of cash on margin. $3,000 of cash, $3,500 profit, 1 week. We were renting an RV. This cost us $100 a day. Our food, our everything was $200 a day. That just paid for an extra 10 days on the road, so we extended our trip. I mean, it's not about how many zeros you have in your bank account. Wealth is about how much money you can generate. So you need to, and how much time it gives you back. So patterns are a very important part of that allows you to make those consistent rule-based decisions. So module 2 will go in depth on that. And this all really leads up to the moneymaker, which is the trades themselves. So the third module of this course is we're going to give you the scans. All of this is all included for life, by the way. You never have to buy the indicators. You don't have to subscribe to anything. You don't, the scans, you don't have to pay for those ongoing. Everything is included. And so we'll be giving you our Smart Money long scan, where every single one of these longs was identified by, our Smart Money short scan, as well as all the tools we use to find them and research them. You don't need anything at all. The indicators are programmed. Oh, excuse me, before I go into that, and we're going to be doing this live next week. So we're going to be teaching and then running these scans live on Monday night, where we're going to be doing probably the short scan. I'm going to guess the Smart Money signal is going to be short, so we'll be doing whatever the signal tells us on Monday. That's the scan we'll do first, and we're going to be picking live trades in class that I'll then be programming live into my brokerage with automated entry, exit, and stop loss, so you can see how it all works from start to finish, and we'll be committing our own capital to that right there in the class in front of you. We'll then be doing it again on Wednesday, and then on Friday while the market's open, we'll be looking at how the trades have been doing over the week, updating stop losses, whatever we might be doing. And this does certainly, the indicator is plugged into, we've got it automatically designed for NinjaTrader, TradeStation, MetaStock, incredible charts, Think or Swim, TradingView and TC2000. You don't need those programs to use anything that we provide for you, but if you have those programs, we do have them already set up there, and you just need to get the installation instructions from us. Question, you mentioned that this works for options. Yes, it absolutely does. We'll be talking about stock and option. Does the indicator work in Think or Swim? Absolutely. What is the delay on the purchase or sale to see if it's recorded? It's a 3-day delay from when an insider sells or buys to when he has to report it to the market. And our scanner will find those beautiful setups for you. It's not just looking for selling. We want to see big selling, and we want to see that there's a perfect pattern, and we want to see the Smart Money indicator doing what it should be doing. Does this work for futures? Absolutely. The patterns module is very good for futures. Of course, the indicator as well on the S&P is going to be incredibly valuable for futures. So, and this will also give you access to our membership portal. But all that you need to really kind of start kicking butt and getting live trade picks that we'll be using ourselves in those live classes. So it's not just ideas. It's stuff we'll be putting real money behind live in class, which I think makes it just that much more exciting. So your $197 should very easily pay for itself even in just the first few days. Are the workshops only for paying members? No, this is an open invitation to everybody here in the group. So no, the insider trading won't work for futures, but everything else will. In terms of the patterns and probabilities, the Smart Money indicators on the S&P. The only thing you'll miss out with the futures is you won't have the scanning side of it for the insiders. So the scanning part of it and the Smart Money scan won't be applicable for futures, obviously. Okay. All right. How do I sign up? Oh, well, the link's right on the screen there, mate. It's acornwealthcorp.com/easy. What size account do I need to get started? Look, I get asked this a lot. If you have a smaller account, this is why you need to be looking for quality trades. Again, just remember, I mean, we've been trading this ourselves, and this has been mostly stock because I wanted to show it I didn't want to overcomplicate it with option trades for the everyday person. But so this model portfolio we traded was mostly stock. We averaged 14% a month, you know, and these are real results straight from our interactive brokers trading account. I mean, just to give you an idea, I mean, just the hypothetical so you can understand the big picture is, you know, 20 grand at 8% a month over 24 months is $100,000. So when people say, oh, I've only got 5,000, I've only got 10,000, so I have to trade really risky things in order to make my account grow. No, 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 no. You know, even though your profit might only be $300 in the first month or $800 or $1,000, if you keep the bigger picture in mind and realize that if you do it every month, that it really can grow to something big. The person trading properly with 5 grand will make more money than the person trading stupidly with $1 million, because that person will be losing money while you're making your 500 or 1,000 or 1,500 or 10,000 a month, whatever, depending on what you're trading with. So start with anything, but get it right. It's better to do it right with small money than to do it wrong with any amount of money. Will the program go over all of this? You betcha. It'll go over absolutely everything. And I think I'm actually out of time now. I just looked at the clock. But if you do have any other questions, here, let me just bring up the Q&A.
I see it, Johnny. I see your link. So if they have questions after they purchase, they can just email you, or they can email you now with those questions.
Absolutely. There's the phone number and there's the email. You can reach out to me. I'll be around for the next little while, so it would be a pleasure to have you on board.
All right, Johnny. Well, I am so glad that you came and spent this time with us, and I hope to see you soon. I'm going to eject you now as the presenter, though. So
bye, everyone.
Enjoy the rest of your weekend. Be safe out there.